very warm welcome to the brand new edition of Policy Watch. I'm Kriti Mishra. Today we'll take a closer look at the new pension scheme for the informal sector. Pradhan Mantri Shram Yogi Maan-Dhan Yojana has been rolled out. This scheme was announced in the interim budget recently. An unorganized worker whose monthly income is 15,000 rupees or less and belongs to the age group of 18 to 40 years is eligible for this scheme. Further, he or she should not be an income taxpayer. Each subscriber under this scheme shall receive minimum assured pension of 3,000 rupees per month after attaining the age of 60 years. The scheme would benefit 10 crore workers in the next 5 years. And for more on this, I'm joined by Mr. Ajay Tewari, DG, Labour Welfare, Ministry of Labour and Employment, Mr. K. Badarinath, Editor-in-Chief, Financial Chronicle, and Mr. Ajay Shankar, former Secretary, DIPP. Welcome to Rajya Sabha Television, all of you. Mr. Tewari, coming to you first. Take us through the salient features of Pradhan Mantri Shram Yogi Maan-Dhan Yojana.
This scheme is basically targeted at the people who are working as unorganized workers in the country. We will understand that as per our estimate of NSSO records, it says that out of 47 crore working force, that includes organized workers also and unorganized workers also in the country, out of 47 crores, 42 crore people are working in the unorganized sector. Unorganized sector means those who are working independently or working as day laborers, wage laborers, or street vendors, rickshawalas, or you name it, and everywhere you can see around you people working in the unorganized sector, like construction laborers, agricultural laborers. So you can understand that India's economy, as we know by the data and economics, that half of India's GDP actually comes from unorganized sector. Those people who work hard, and as Finance Minister in the budget speech, he said that half of India's GDP comes from the sweat and toil of 42 crore unorganized workers in the country. Now we see all around us, people are working and they are becoming slowly and slowly, they are like daily wage laborers, construction laborers. They don't have enough money to look after them during their old age. So who will provide them the old age protection? They do not have a system of pension because they are not in the organized sector. Those who are working in the organized sector, that means they are working in the companies who have more than 20 employees. They are entitled for regular pension after they retire. But what about these people? So that is why government thought that why should we not fulfill our obligation, that is called social security for the people, old age protection under section 3(1)(c) of Unorganized Workers Social Security Act, passed in 2008 by the Parliament. That section entitles and mandates the government to have this kind of social security old age protection scheme for the unorganized workers. Now here we have made this scheme for the people who are not only in the unorganized sector but also earning only up to 15,000 rupees. That means we are targeting the lowest income strata people, those who have no security at all. And here we are telling them that you contribute a little from whatever saving you can have monthly, as little as 55 rupees. For a person who enters this pension scheme at the age of 18, he will deposit 55 rupees per month. Government will also deposit in his pension account 55 rupees per month. And then he will be getting a 3,000 rupees minimum pension at the age of 60 and beyond, as long as he lives. And this is a very simple scheme. And it is actually targeting on these people, even the Manrega workers, you see agricultural workers in the rural areas, they are all covered under this scheme. It is going to cover a large population. I think it's going to be one of the biggest pension schemes in the world in the social sector.
Absolutely. It is expected to be one of the biggest social sector schemes in the world. But talking about the specifics now, what is the eligibility criteria? Who can avail the benefit? And what is the process of enrollment?
Eligibility criteria is like he has to be unorganized worker, number one. Number two, he has to be between 18 to 40 years. He can join the scheme. Thirdly, he must have an Aadhaar card and passbook, saving bank account passbook or Jan Dhan passbook. And he can go to any of the nearest common service center that we have CSCs all over the country. He will just walk in with the Aadhaar card and he will walk in with a saving bank passbook in his hands. So only these two documents are required and nothing else. He goes there, he gives his biometrics, everything is populated there. he gets himself enrolled and he gives his first contribution, which is auto calculated. If he is 29 years of age, he will pay 100 rupees. First amount will be paid by cash in the CSC, for which he will get the receipt. He doesn't have to pay anything else. He doesn't have to produce any document of 15,000 rupees or whatever. Income certificate is not required at all. Here, everything is based on self-certification basis. That means he will certify himself that he is of this income group, and we trust him. We believe our people, and on self-certification basis, he is entitled to enroll. Enrollment process will not take more than 5 minutes. And he just walks out with a pension, Shram Yogi pension card in his hands, with a policy number there, which will tell Shram Yogi pension account number. He will have this number whenever he wants to revisit. He can go onto the portal, or he can go back to CSC and get the services, get his accounts checked later on. So it's a very simple process, no questions asked. He just goes with two things in his hands, Aadhaar and saving bank or Jan Dhan passbook. That's all.
Right, absolutely. So the Ministry of Labour and Employment is asserting on our show that the entire process is going to be very simple and it will not take more than 5 minutes. Now, getting into the wider perspective, Mr. Ajay Shankar, as Mr. Tewari pointed out, that more than 42 crore people are employed in the unorganized sector. More than 80% people are employed in the sector. 50% contribution to the GDP comes from this sector. Earlier, we've seen the Atal Pension Yojana. Now, this new scheme. How important is this new scheme for providing social security benefits to the workers in the unorganized sector?
This is a very important landmark development in the development of the country, because this is a basic building block of creating a social safety net and a social welfare state. And how important it has been to the prosperity of other nations can best be judged by the fact that Germany under Chancellor Bismarck introduced the 3 basics of a social welfare state in the late 1880s, which is old age pension, unemployment and health. And he did this not because he was a socialist. He wanted to make a strong imperial Germany. So this was considered an essential building block for making a strong and a great nation. So I personally am very glad that India is moving in that direction, and hopefully we will move further and faster as fiscal resources permit.
So it is very important step for a strong edifice of our country.
Because unless the people at the bottom of the pyramid are productive enough, feel secure enough, they will not deliver their full potential to the economy. So this is very important to see that those at the bottom of the pyramid, their healthcare needs, their old age needs, their unemployment needs, their living needs are taken care of, because only then they can be productive enough to compete in the global economy. Because in India, the problem is you can get the same machine as in China or Japan or Korea, but if the worker is tired, he is not fit, he is not healthy enough, he will not produce as much, or he will not have that quality. So I think this is a very important step for adding to India's medium to long term competitiveness and strength and growth.
Absolutely, very important
I would hope
for our
that,
economic growth
and
as
I would
well.
hope that as fiscal resources permit, we go farther. I mean, 3,000 should rise to higher levels. The state share of contribution should rise, but all that can happen only when we can afford it. But the important thing is that we recognize the necessity of doing this and have taken the first big step.
Absolutely, and the government has already committed to providing additional resources as and when needed. Mr. Badarinath, tell us, in case of the demise of the beneficiary or any other eventuality, what is the provision for the family?
I'm very comfortable with the scheme that has been launched by the Government of India. It is the first ever, perhaps the largest in terms of pension cover that we are providing to the lowest strata of the people. 2 things come to my mind. One is, if we have seen the agriculture insurance policy that we have talked about, in the agri insurance, it is the insurance companies which made the money and not the farmers who were least benefited because of the certain loopholes that were there. Second is, here we are talking about a scheme where there might be some kind of, at least in some few states, the 2 gentlemen will agree that there is a duplication. Some states already have some kind of a structure. How
Right.
do we avoid this duplication? Number one. Second is how do we ensure that the money goes into this guy's account? And third is how do we ensure at the lowest level the money is not taken away by these by people in and around the village from him?
Right.
This will be a big challenge, though it is not that it cannot be overcome. But the point here is, and fourth is, between 18 to 24 you want the enrollment. I read somewhere, you must clarify perhaps, that even people up to the age of 40 can be considered for enrollment under the scheme. I'm not sure whether it's right or not, because many a time what happens is, Mr. Tewari, you will agree that at the age at which you enter into the work area, many a time could be much older. I would love that 18-year-old guy gets work there, but if he is not able to get, and if he is able to get into the system of earning little later, why deny him after 22 or 24? That's the issue.
Right. I'll take that to Mr. Tewari. Mr. Tewari, how do we avert duplication?
Yeah, let me address all the situations here.
Yes, sir.
We had dwelled a lot upon this scheme while we were deciding about the features of the scheme. One is it is 18 to 40 years, not 18 to 24. So anybody up to 39 or 40 years can enter the scheme. Now, the money falling into the wrong hands, we have thought about the situation, and then we said that everything will be DBT.
Yes.
All the installments, because it's his hard-earned money. Hard-earned money cannot be loosened like this. It has to go through auto debit. So we have utilized the best technology available with us. Fingerprints, this biometrics, as I had already talked about. So there is no problem of identity, which will be cross-checked with Aadhaar records right then and there. Then only he or she will be enrolled into the scheme. Money will travel through auto debit, and when he will get the benefit, the pension, that will also go to his same account, saving bank account, by DBT. So there is no way this money can go anywhere else. It is a complete record. At the back end, we have LIC, Life Insurance Corporation, who will be dealing with the pension fund as pension fund manager. On the front end, service centers will be giving the service to the people. So this is a very feasible scheme. I think we have put all the technology and whatever is available with us, the machinery, the implementation machinery and the arms, we have put all the resources together. Now, as far as committing money to the scheme, that the contribution of government, that 50% that has been decided,
Yes.
because the slogan is basically the government is a partner, 50% partner in your future. As we know, God helps those who help themselves, but of course government is standing with you if you are standing for yourself. So 50% you contribute, government will also come forward and contribute 50% right then and there. So now duplicacy or other schemes running parallelly in some of the states, those are very old schemes, and pension schemes are long-term schemes basically, and this is basically a nationwide scheme which will
Right.
be available from Arunachal to Gujarat and from Kashmir to Kanyakumari, as we say. It is available to everyone through 3,15,000 common service centers, CSCs, spread all over the country. Now, this will be running, this scheme is not a parallel to any scheme. This is unparalleled scheme. State governments have been running their schemes like Tamil Nadu, Kerala, Karnataka, some of the leading states. They had this example, but this scheme is not going to nullify those efforts. This is
Okay.
going to only supplement, or in fact, this is going to be one of the biggest scheme, as I told you, and people will be free to move across or can join this or that scheme. There's no restriction on that.
So it is a move to supplement the endeavors of these states as well, but I'll seek more clarity on auto debit. What is going to be the structure of contribution from the subscriber's side, and how would that change as the age of the subscriber progresses?
Yeah, if you join early in the life, then you have to pay less monthly. If you join at 18 years, you pay 55 rupees per month only throughout your life till you become 60 years. If you join at the median age of 29, as we say, and most of the people are likely to join between 25 and 35 years of age. So 29 is the median age. So you have to pay 100 rupees per month, then onwards up to 60 years of age. If you join at the fag end of your 40 years, then you have to pay 200 rupees per month. So it's basically, it's a table. If you join early, you will pay less. If you join later, you pay more monthly. So that is how it has been tabulated. And government is equal partner. If you are paying 200 rupees per month, government will pay 200. If you are paying 55 rupees on the first end, government will also pay 55 rupees in your account.
I'll take that to Mr. Shankar. Mr. Shankar, as Mr. Tewari pointed out, that the government will make matching contributions and LIC would manage the fund. But how would the fund collected be managed and invested? What is going to be the procedure?
It will be the LIC which would be managing the funds.
Right, sir. And how would that benefit be distributed across?
Typically what fund managers do is that they invest the money and try to make it grow, and then they share it equitably across all beneficiaries. So those of us who go in for LIC policies for life insurance, that is what happens. We pay a fixed contribution. There is a particular amount which we are supposed to get at the end of the policy's life or when the person passes away. And if the LIC makes a little more money out of the investments, there is an additionality that each policy holder gets. So here the LIC would manage the fund and try to get good returns and give the 3,000 rupees pension. And if at the time when the scheme really starts giving out money, there is more money accruing, then between government and LIC they would take decisions as to how to handle the extra money if they earn some, and hopefully they should earn some.
Right, sir. Mr. Badarinath, given the erratic nature of the unorganized sector, there are provisions about the exit and withdrawal. How important are those provisions and how can the government further simplify it?
My guess is I would seek more clarity on this, in the sense that 5 to 10 years, if we are going to get out of this scheme, the government's contribution part may not go to the beneficiary when he gets out of it. This seems to be a weak link in the project, the scheme, for the simple reason that as the nature of unorganized work is, I might have work for 5 years, 4 years, 10 years. After that, I may like to get out of it. Or there is a massive emergency where I need to pull out the money. But at that point of time, it's a fact that whatever you have contributed or the worker has contributed, he gets it back with a simple interest of 4% or something. But the government's part, contribution part, is not going to come to him, if I recall. Second is, the nature of the work, he is bound to go for migration. What happens if he migrates today, he is in Bihar, tomorrow he goes to Uttar Pradesh, day after tomorrow will the Aadhaar card alone work, or what is it that is going to allow him to continue his pension contribution? Third part is that can there be a provision where every 5 years or 10 years there is some kind of a payout for him? If he enters the scheme, say for 18 years, then up to 60 years he is not going to wait, because his resources is very meager. So can there be some kind of a payout every 5-10 years so that it keeps him, this could be an incentive for him to keep him in this scheme. These are the issues which immediately come to me, because after 5-10 years I am saving with the government of India or the LIC, and after that for him it's only a saving instrument. That's all. He doesn't understand pension and all that. For him, he says, okay, when I'm old, I might get some money. He knows it. But if it is made 5 to 10 years payout, perhaps it will be more of an incentive for him to get into the scheme, keep him there, and allow him to contribute even after 5 to 10 years.
Right. So, Mr. Tewari can provide more clarity on that. What happens in case of migration?
Migration, physical migration from one state to another will not have any issue here on the scheme, because see, this is linked with your bank account, and nowadays you have core banking everywhere, whether it is scheduled commercial bank or your cooperative banks or rural banks, they're all on now core banking. So unless and until he changes his account number at some point of time, if supposing he migrates from Bihar to, let us say, Maharashtra or Delhi, so he has his own account number which is already linked to his pension account number. Pension account number will remain the same, which is maintained all as a core banking, part of core banking. So migration is not the issue here. He will continue to hold the card, and wherever he goes to, whichever service center and he can get his accounts updated or he can see his accounts. Now, secondly, the issue of exit clauses. I believe exit clauses we have kept them very, very flexible, because we know the kind of people we are dealing with, the client we know. The government has been very considerate and flexible on the exit clauses. Now here, because pension is a long-term investment basically for your old age, we don't want people to exit unnecessarily. Of course, some people may have some problems and would like to exit. In that case, the money will be returned to him with bank interest rates. So he doesn't lose his money, and it's guaranteed by it's a government pension scheme. So of course, government is the authority which says that nobody's money will be lost, it will be returned to him. But when he is exiting, he will get only his part of the money, not the government's contribution which has been given to his pension account. So and the clauses, I think exit clauses are absolutely flexible and in the favor of the beneficiary.
And also, sir, please shed more light on the provisions dealing with the default on contribution.
Okay, coming to default, of course, we understand that since these are low income strata people, and they will default. Some people may default for a month, or some people may default for 2, or somebody falls sick. So we have kept the provision that up to 11 months, anybody can rejoin the scheme, and he will be sent SMS on accumulation of his defaulted amount, so that he knows how much he has to pay. He can repay the whole thing. After, let us say, 3 months, he can give all the 3 installments, along with maybe some penalty which may be decided later. As on today, there is no penalty decided on this.
Right.
So he can rejoin the scheme with 3 installments he can pay later on. So this is a very, very simple and very, very favorable scheme. I think nobody can deny it. The options are very simple here.
Absolutely. Mr. Shankar, talking about the incentives now, how can the government incentivize people to take up this scheme in large numbers?
The key would be communication. Because the fact is that we are dealing with the poorest people. Some of them are not literate, and many of them have some inhibition about dealing with government. So I think the key would be communication, and the second would be that the CSE where he is supposed to go, if we can make that interface friendly enough. Because if the first people who go there come back saying it really was in 5-10 minutes and there was no problem and the staff there was friendly, I think then it would spread like wildfire. So the key would be the pilots and the first experiences of those who go to these centers across the country. So if they come back with a very positive story, and if the communication both directly to the beneficiaries and from those who are the first ones to go to these centers, if that message is positive, then I don't see why we should not get 90% coverage of the target group within a few years.
So the communication has to be very effective.
Because in terms of the need, 100% should be there.
Yes.
And 100% would like to be there, except when they can't afford the modest contribution.
Absolutely.
And there the provision of default is there. So, I mean, I would imagine that they would get in, struggle to pay if there is difficulty, they may have defaults for a few months, etc. So the initial entry should be very, very large and successful, provided, as I said, of the 2 things. One is that they know the benefits that are accruing to them, and B, the experience of the first few who go to the centers is positive. And that's a big challenge which Mr. Tewari has of ensuring that the experience of the first visitors is positive enough for them to go out as actually what I'd call brand ambassadors of the scheme.
Right, absolutely. Mr. Badarinath, I have last 1 minute. How can the government ensure that there's effective implementation of this important scheme?
That is the biggest challenge, actually. As I pointed out earlier, Pradhan Mantri Fasal Bima Yojana, where the insurance of the crop was intended at, and the insurance companies ended making up more money than giving some relief to the farmers. Here, will LIC make more money, or will it provide pension to the people, is the biggest question mark. Though I do expect the insurance companies to make a small profit, as Mr. Tewari does say, maybe a little profit, or the maintenance cost at least is reimbursed to them. But point here is, yes, one is implementation part will be a big challenge, and it's a huge country with a lot of professions, and you are attempting it for the first time.
Right.
And my guess is we need to, learn our lessons from the Fasal Bima Yojana and perhaps improve upon it and try and see that the maximum number get the benefit. One. Second, migration part that I was talking about. Third is, if they can give a payout every 5-10 years, perhaps this will be an incentive for him. He has to see cash in his hand. He will not wait till 60 years to get his cash. That seems to be the issue. Perhaps a part of it, 5%, 10% of the cash should come to him periodically like a term plan, so that he would be interested in putting together his money, and also he earns very little.
Right.
So how do you help him because he will always be through a liquid crunch.
Right. So there has to be an incentive for the workers, and the entire process that should be seamless. So the idea is to ensure that the workers lead a dignified life. And on that note, thank you so much for joining us. And that's all we had for you in this edition. Thanks for watching, and stay tuned to Rajya Sabha Television.